mom used to have Tupperware parties. So direct sale can also be in a party situation. So I want you to understand that when we're talking about it in terms of an independent contractor, sole proprietor, self-employed, and business owner are all interchangeable terms, meaning the same thing when it comes to their Schedule C. So you can use any term you want there. Robin, can you mute your line, please? Thank you. You can use any term you want. It just, as long as they're filing a Schedule C, that's what we are talking about today. Let's do a check for understanding. Read the question, and once you think you know the answer, please give me, put a check mark or put in chat which one you think is correct. So we're all over the place right now. So there is 19 of you, so I need either a lot more checks or a lot more. If you only put in your answer in chat if you do not have annotation tools. Otherwise, the rest of you find your check mark, please. Thank you. Good, and no one has yellow today. So which of the following is not one of the main categories courts concentrate on to determine if someone is an employee or an independent contractor? The one they do not look at is type of business, okay? They're going to look at behavior, financial, and type of relationship. So I can't tell you how many times I've had someone bring me in a 1099 miscellaneous, okay? 1099 miscellaneous. Box 7 means that you are an independent contractor. You now have to file Schedule C, and I start talking to them, and I say, oh, so you're self-employed? And they go, no. I'm like, well, that's what this piece of paper says here. So then we start talking. So when we're talking about behavioral, if I am, when the court's deciding whether you're employee or independent contractor, behavioral is talking about if I tell you when to come to work, what time to come to work, then that's a behavioral, and how to do your work, you're an employee. If I pay you, you're, so they look at these different behaviors. So behavioral courts do look at the behavior of the taxpayer, who controls the workflow, and who has the right to direct and control the worker. So if you are working for someone and they're saying you're an independent contractor, but yet they're telling you when to come to work and how to do your job, you're not an independent contractor. Courts also consider financial, who has the right to direct or control the business portion of the work, such as how the worker is paid or reimbursed, okay? So if you have no control over how you're paid or reimbursed, and you do not have an opportunity for profits and loss, you are an employee, not an independent contractor. And then the relationships, courts also consider how the business and the taxpayer interact together, and what is their relationship to each other. For example, is there a written contract? Who sets the hours, location? So you get it, right? And I can't tell you how many times I've had these young adults, and usually it's younger people because they haven't been doing their taxes long enough, and now they're going to be subject to Social Security and Medicare, and they're shocked. Okay, let's move on. So if I am self-employed or an independent contractor, and I'm going to file a Schedule C, I need to have an accounting method. So one of the first things a sole proprietor should do is figure out what accounting period they want to use. So if a taxpayer uses the calendar year as their annual accounting period, what time period must the taxpayer use to report their income expenses? So if I'm a calendar using the calendar period, what are my dates for my year? When does it start and when does it end? Yep, there you go, Robin. A calendar year goes January 1 through 12/31. So Valerie, I'm only going to change it because it's not a 12-month period. It is January 1 through 12/31, which is 12 months, but you have to be specific because you'll see why in just a second, okay? What if the taxpayer uses the fiscal year as their annual accounting period? What time period must they use? So what is fiscal year? You can always unmute and tell me if you can't type fast enough. Well, yep, 52 to 53 weeks. That's true. Yosni? And then several of you have pieces of it. 12 months, Robin S. says 12 months can start at a different date. Kathleen says 12 consecutive months. You're right, Kathleen. 12 ending on the last day of the month, except Cindy, it cannot end. There you go, Yosni. Last day of the month except for December. So it's 12 consecutive months and cannot end on 12/31. And I realize that I give you only a short period of time to do all the typing. So it sounds like you've got a good grasp on that. So when is the counting period established? So when do I establish my accounting period? When do I establish my accounting period? Right. When I start my business, so it's established in the first year of tax filing. Now, Marat, we're not going to talk about corporation statuses because we're not talking about corporation, we're just talking about self-employed, okay? So let's talk a little bit more about calendar year then. Sometimes there is not a choice of which accounting period has to be used. When is a taxpayer required to use a calendar year tax year? So using your text tool, I want you to text on my screen things that would cause you to have to be required to use a calendar year accounting period. You do not keep books. And someone says, huh? Yeah, that's interesting, right? So if you do not keep books, you have to use the calendar tax year. What else? Good job, Kathleen, and whoever typed it on the screen. Yep, IRS requires you. Kathleen, right. IRS requires the business to use a calendar year. And there's two other ones. Got any more for me, you guys? No annual accounting period. Yes, Kathleen. And the last one is present year does not qualify as a fiscal year. So let's look at these items in debrief real quick. I need to do something really quick here. I need to send something. I need to find. Oh man, I hate this. Excuse me for just a second. I need to take care of something. Okay. Hold on. I got to get back to where I need to be. Okay. Sorry. So many sole proprietors do not keep books and therefore must use a calendar year. Many sole proprietors do not know that there is an option. The accounting period must be chosen in the first year of business. So what accounting method do you think H&R Block uses? So what calendar period, not accounting method, excuse me. Yes, we use a fiscal calendar year. Our fiscal year goes from May 1 to April 30th. And then if you need to change, IRS approval must be given to change accounting periods once established. The request must be made on Form 1128. Okay, so let's see. We're going to do a check for understanding. And I'm going to change it up a little bit. Instead of once you read the question, please put in chat whether it's A, B, C, D. All of you need to put it in chat. Plus, you can put a check mark on, but I need it in chat, please. Okay? So which of the following is not a valid accounting period? And if you chose C, periodic tax year, you are correct. So the periodic tax year is not a valid accounting period for sole proprietors. Remember, the choice of accounting period has a bearing on the recognition of income and deductible expenses. Thank you, guys, and thanks for switching it up. We'll just go back to the normal way in a second. I was just checking on something. Thank you so much. So in chat or on my screen, what form do we use to report our income and expenses when we're self-employed, sole proprietor, independent contractor? What form are we going to use? Yep, Valerie says a Schedule C. So now we're going to take a look at the Schedule C. So Schedule C is used to report income and losses from a sole proprietor business. So the top part, what we're going to look at right now, this is called the header. So whose Social Security number is entered on the Schedule C? Whose Social Security number is right there? Yeah, the owner, the sole proprietor. So if our sole proprietor does not have, you can use your highlighter if you want. If they do not have a Social Security number, what other number would we use on the tax return to identify them? EIN, which is right here, okay? Not their TIN number, okay? TIN number, are you thinking of ITIN number, Elia? Because there's a difference between an ITIN and an EIN number, okay? An I-10 is a non-resident alien who gets a number, but that would go up here where the social would go because it's kind of one and the same, but not. So if your self-employed person has an EIN number, we're going to use that and not put their social security number on there, okay? So basically, this is when you get to shine. You're welcome, Aaliyah. This is when you get to shine as a tax preparer, and you get to say, if you have a sole proprietor that comes to your desk and they don't have an EIN number, you are going to, oh gosh, hold on a second, you guys. I think we just lost contact. Nope. Can you still hear me? Someone called in on my phone, sorry. Okay, it made me lose my train of thought. So if they're using their social security number, this is when I'm going to recommend that they go out to IRS and apply for an EIN number. And the reason why I think they should have an EIN number is we need to protect our social security numbers. And the more we put our social security number out there on different documents, the bigger chance we have of getting it taken from us. And the IRS will give your business an EIN number free of charge. No big deal. And then in box B is our code for the business. And when you start in BlockWorks, you'll actually be able to click a link here and it will come up with a list of subcategories. And then you open them up and find the one that is closest to what your client is doing. James Gordon, his main category is management, scientific, technical consulting services. And if he has a business name, we put it here. And if he doesn't, we just leave that blank. And the business address would be if it is different from his own home address. So if he's running this out of his home, he has no business name and he's running it out of the home, we're going to leave C and E blank, okay? Let me look real quick. So it is important that you make sure that you get the closest business code, an accurate business code. The default code is 9999, but we only use that in case we cannot figure out the real code. So now we're going to look at line F. That's going to be talked about accounting period, and we have a choice of cash, accrual, or other. So would someone like to unmute and tell me what the cash method is? Cash method of accounting. Kind of it's probably, you can write it in chat, but it's probably not, it's going to take you a while. What is cash method of accounting?
It's when the cash the year is recorded in that same year and the expense is in that same year. There's no like carrying forward.
Okay, so the income is actually in constructive received and the expenses are actually paid during the year, and that's the cash method, okay? Yes, thank you, Valerie, good job. So what is accrual method? Who wants to take on accrual method? So cash method is we're going to account for the money we received and the expenses we paid between January 1 and 12/31. Accrual method, we account for the money we made and the expenses we spent even if we haven't paid or received. So let's say I'm a plumber and I have an account at the hardware store. And I go in there and I buy supplies on 12/15. So I have a receipt for these supplies, but I'm not going to be billed till January 1st. because I'm accrual method, I can, even though I didn't pay for them yet, I used it and I will be able to claim it as an expense. The same thing is, let's say on 12/15, I fixed this plumbing, the client did not pay for it, and I billed them and they paid me in January. So even though I haven't received the money yet, it will still be included in my current year. Okay? Hold on, give me a second. I got to get my phone to stop alarming at me. And then hybrid is just, the other is our hybrid. And does anybody know what type of, what we would use hybrid for? Hybrid is a combination between cost, cash, and accrual. What types of people have to use a hybrid? What do they have? What do they have that forces them to use the hybrid method? So I sell Avon. Yes, Kathleen, go ahead.
They use cash.
Not cash. I have something that I have in my possession. Have something in my possession that I have to, because I have it in my possession, I'm forced to use the hybrid method. So if I have inventory, okay, so now I'm selling Avon and I carry inventory, I'm forced to use a combination of cash and accrual because the inventory is a method of accrual, okay? Give me a green check if you understand that. Thank you. So then G is, did you materially participate? And I believe we will talk about that. If not today, we talk about it later on. But material participation means that you are participating in the business and everything, you have everything at risk. The next is, did you acquire the business? Is it a new business? And can we mute? Someone needs to mute. Valerie, can you mute, please?
Ooh.
And did you make any payments to people on 1099? And if you did you do that? Okay, so this person wasn't required. We're going to talk about when you're required to provide 1099, and they said they didn't. So then obviously, okay. So that alarm was my first break. This makes me really nervous. So I'm going to see you at 12 after. So put up your coffee cup and Okay, if you guys are back, please take down your coffee cups. That 10-minute slides in a hurry. Wow. I didn't even get time to go to the bathroom. I was dealing with something else. Awesome. So take down your coffee cups. Let me know you're back. Annalie, Claude, Elia, Gwen, Marat, Robin, are y'all back at your computers? Perfect. Okay, so then we're still on page 1 of your Schedule C. We're now going to look at Part 1, income. So what is included in gross income? You can put it in chat. You can unmute and tell me. Some of them are complicated. You can, might be easier. Everything. You have to give me examples, Murad. It's not quite that easy. What do we put in as income on our gross receipt? Murad says everything, but there are some other things that we put in. What we sold. Well, yeah, like cash, credit receipts, you understand. There's also other things that we put in. Yes, Kathleen? Go ahead and unmute.
Fair market value of the product.
So what do you mean by fair market value of the product?
Well, or property. It's if
but
you're.
You have to go further than that. That's not enough information. There we go. Robin and Robin have got it. So fair market value of what? Of the property you did what with? Did I stumble you up, Kathleen? Are you there?
No, exchange for goods and services.
Yeah, but we didn't hear that. You cut out. All we got was fair market value for exchange of goods and services that were provided. So that's bartering. Thank you, Kathleen. I appreciate you for being willing to voice your voice. Yeah, so that if I have a business and I am bartering, I have a tractor and I'm a farmer, and I have a tractor, and my and a fellow farmer has a hay baler, and we barter. So I let him use my tractor and I use his hay baler. Then that is part of your gross receipts. You have to figure out the value. So cash, credit receipts, the amounts you receive. If you are self-employed, what could you receive from someone that paid you money? What document could you receive? It's right. Reporting. There we go. A form miscellaneous, 1099. Those are included in our gross receipts. We're going to talk about those in a minute. Can anyone explain what return and allowances is? What is a return and allowances? What would that be? How would you best describe that? Return and allowances. Yes, Robin S. Valerie, yes. That would refund. So that's money you had to give back. So let's say I sold you a bottle of perfume from Avon and you brought it back to me and I had to give you your money back. Well, that wouldn't be fair if I had to claim the income, but I couldn't claim the money I gave back to you. So you take 1 minus 2, and that's going to give you your income. So then in a little bit, we're going to talk about line 4, which is cost of goods sold, and then we get our gross profit. Give me some examples of other income. For a business, what are some examples of other income? Yep. Bank account interest. That is other income. So I have a banking account for my business and the bank is paying me interest on it. I didn't do anything. So that's part of my other income. Got some other ideas? What's some other examples of other income? Credits, yeah. So this, let's say I'm using biofuel, and I end up, it says if you send in this, we'll give you a rebate. We're going to give you a biofuel credit. That is income. Yeah, see, it's right here. State gasoline or fuel tax credit. Any other ideas? Good job, Aaliyah. So what if I had this business and my business won selling scraps? There you go. So I'm in the business of making metal sculptures, but yet I always have pieces of metal left over, and I get it all together and I sell it for scrap. So basically, if you think of other income, it's not regular business income. That's how you define it. So if it isn't something you receive for doing the business, it would be other income. So we're now going to take a closer look at cost of goods sold, which is line 4, which we call cost. So can someone explain, I would need a volunteer, can someone explain cost of goods sold? Remember, I can't. Okay, Valerie's going to do it. Come on, Valerie.
Cost of goods is what it costs you to bring the goods to market, to sell. It's the shipping, the what it costs you to buy the goods, to ship them. Any cost within that is the cost of goods sold.
That
The
is
amount.
right.
Mm-hmm.
So if you were to look down here, and this is on actually page 2, it's part 3. So when you do the schedule C, you do the header part 1, and then you go do part 3 before you can move on, because part 1's not complete until you get part 3. So this is where if you were holding, so purchases less cost of items withdrawn for personal use. So now that's my Avon, okay? Let's say I did something for Etsy and I paid someone to help me make these items. Materials, supplies, other costs. Good examples of other costs is shipping, mailing, that type of thing. So when we're looking at cost of goods sold, if you are doing cost of goods sold, you are going to have inventory, period, plain and simple. So you start out with your beginning inventory and you put all of this stuff together, minus your ending inventory. Okay, so we've got all of this, take all this. You're going to end up with a cost of goods sold for this one of $43.75. Now, what I want you to understand is that clients get so excited because they come in their first year, they've gone out and bought all this inventory. And they say, I went into business this year, I'm going to have a huge loss because I bought $50,000 worth of inventory. I'm like, oh, okay. So I said, how much of that inventory did you sell? And they said, I sold 10,000 of it, so I have a $40,000 loss. No. You only get to claim the cost of goods sold, the goods that you sold. So his beginning inventory would be 50,000. His ending inventory is 40,000. His cost of goods sold is 10,000 because he still owns that 40,000. So there's no loss there, okay? So we already stated the cost of goods sold is the cost in the goods that were sold, or in other words, the cost necessary to create or sell the goods. It is calculated in Part 3 on page 2, Schedule C. beginning inventory plus purchases and other direct costs minus ending inventory, and that's how you end up with line 42. So can you give me some examples of businesses that would have cost of goods sold? You can put it in chat. You can put it on my screen. Can you give me some businesses that would have cost of goods sold? Yes, Kathleen.
Flower shop.
What?
A flower shop, a florist.
Yes, a florist definitely would have cost of goods sold. Got some other ideas? Scrapbooks. Restaurant. No, restaurant's not going to have cost of goods sold because they don't hold an inventory. Okay, I don't think a restaurant would qualify. Auto repair store could if it's holding an inventory. So Kathleen, mute your line, please. So if you think of anything that has a inventory, department stores, yes, for sure. You can even think less big than that. How about a gas station? If they had a little store, maybe, or if they sold oil. Gas when you're talking about the gas in the tank, that is, oh wow, that is way complicated. It's not as simple as that's what they have in their tank. So let's talk about a candle maker. Let's use example of self-employed candle maker. Would they have a cost of goods sold? So if I am making candles for a living, am I going to have cost of goods sold? Okay. Yes. What types of expenses am I going to incur? There you go, Brianne. I'm going to have wax, jars. What else am I going to have? What kind of expenses am I going to have in my cost of goods sold? Shipping and handling, yes. Now, Robin, we're going to hold on to the advertising for just, Robin S., hold on to that advertising. What else are we going to have? What does it take to make a candle, you guys? Yeah, so wick. So heat is another thing. We're going to talk about that in a minute. Labeling, yes. What if I'm making lots of candles? What might I have? My time doesn't count for anything, Kathleen. What might I have if well, I have inventory. I might have a machine, but what if I need help to make? I'm making so many candles I can't make them myself. Labor. There you go. So I would, as a candle maker, I could have wax, wicks, jars, coloring, fragrance oils, packaging, shipping. Good job. Well, cost of heat, we're going to cover that in a second. That's not part of cost of goods sold, and I'll explain to you why in a minute. If the taxpayer is a small business owner with no employees and is making these candles from their home, where would the expense of advertising for the candles be reported? So now I'm advertising. Is that going to be part of my cost of goods sold? No, it's going to go directly, and we're going to look at expenses in a little bit. So when we're looking at cost of goods sold, we need to think about what is the ingredients or what do we need. And if you're looking back here, you're looking at what did I purchase? Cost of labor, materials, other costs would be shipping. The utilities are going to come in a different space shortly, okay? So for the same taxpayer, will the inventory of candles made and ready to sell but not sold be included? So when we're talking about cost of goods sold, where are those going to be included? So I've made the candles and I haven't sold them. What are they? Their inventory. Yes, Kathleen. Oh, wait a minute. Excuse me. Hold on a second. We have Valerie. Yes, Valerie. You guys can just unmute and talk to me. Valerie, do you have a question or were you going to make a comment?
No, I was going to make a comment about the cost of goods because I was not seeing it the way you're saying it right now. I didn't realize that the only reason you can use cost of goods is when it has to do with inventory.
Okay, because what were you thinking? And then I'll get to you, Kathleen.
Okay, I was thinking like how you when you're making the how you use the candle, right? Like you have some. If I get something and it doesn't have any inventory, but I do a quick turnover, I still have to pay to
Yeah,
get it here, but I do a quick turnover.
right.
That doesn't include inventory, but I still have a cost of goods. You
Correct.
understand what I'm
So
saying?
if your beginning inventory was 0, you would put 0, and if your ending inventory was 0, you'd put 0. So if
Okay.
you are producing a product,
Okay.
okay,
Hmm.
so you're right. Not necessarily would you be maintaining an inventory. You could
Okay.
even purchase these candles. Okay,
Okay. Hmm.
purchase. So now I'm making ready-made candles. I'm not even making them. I'm just a distributor. So I'm going to put the cost of them on line 36. And
Okay.
let's say I'm just getting, that's okay, Valerie. I'm going to finish my explanation. So then let's say I'm getting these candles. They just come in big boxes, like 100 to a box. And now I'm paying someone to put them into my packaging. Okay. And then I'm paying shipping. Yes, you could virtually have no inventory. Okay? Does that make sense? And Kathleen, did that answer your question? Okay. Yeah, I didn't want to narrow that too much. So I told you earlier, okay, so we're back to our candle maker. Where are we going from here? So give me a green check if you understand. The main thing I need you to know about cost of goods sold is you only get to take the cost of the goods that you sold, not what you're holding on to, okay? Because a lot of people get really confused about that. They think they're going to have this huge loss. Okay, thank you, guys. So we talked about the Form 1099 miscellaneous. So I'm self-employed. There is no loss, Gwen, in cost of goods sold. What do you mean? Can you unmute and explain that to me?
So if you have a huge inventory and you didn't sell all your inventory, but you still have all the rest of this inventory, what do you do with, how do you account for that?
Then the next year when you're in business, that becomes your beginning inventory.
Oh, okay.
So it just keeps rolling. It cannot create a loss until you go out of business. Okay.
Oh, okay. Got it.
If you go out of business and whatever you did, I mean, if you donated or threw it away or whatever, then it could create a loss. But no, the inventory just rolls from one year to the next to the next. Good question. So we're to 1099 miscellaneous. If I have an amount in box 7, what form am I going to have to fill out? So I have a box 7. What am I? If I have an amount in box 7, what does IRS think I am? Does that make sense? Am I an employee or am I self-employed if I get a box 7? Right, I'm self-employed. So I don't know that I have talked to you about this before, but self-employment Schedule Cs can be kind of expensive tax returns. So it used to be that if there was a small amount in here, maybe, I don't know, 700, 800, 1,000, 2,000, tax preparers would say, oh, well, you know, I don't want you to have to spend all this money to have this expensive tax return. So I'll just, and you don't really do this for a living, so I'll just put this on other income. Okay. No, never. If a 1099 miscellaneous arrives at IRS with a Box 7 amount and they go to your return and there is no Schedule C there, you're going to get a CP 2000 letter that says, you didn't account for this money, where is it? So if I provide how much in services, so I'm self-employed, and let's say I'm a subcontractor. If I do over how much I get paid over how much money do I then will receive a 1099? When must a 1099 miscellaneous be issued? What's the dollar amount? So I'm working, the contractor, I'm a subcontractor, they paid me X amount of dollars. How much do they have to pay me before the contractor has to provide me with a 1099? So now we're talking about the 1099 miscellaneous. I'm a contractor, I have subcontractors. How much what's the dollar amount I have to pay, that or more, before I'm required by law to issue a 1099 miscellaneous? Any ideas? This is important to know this. So it is $600 or more. So if I am working for someone, okay, so I'm a subcontractor, the guy I'm subbing under, if he pays me $600 or more, he's required to issue me a 1099 miscellaneous. Same here, I'm the business owner, so I'm the candle maker. I subbed out, instead of making my candle making people employees because they could do it at home, they were subcontractors. If I pay them $600 or more as a business, I must provide them with a Form 1099 miscellaneous. If I do not do that, a couple of things happen. First one is IRS can disallow that as an expense, right? So if I'm paying someone $600 or more to produce a candle, that's an expense for me, right? Give me a green check if that's an expense for my business. If I'm paying it out, is that an expense for my business? Okay. If I don't do what the IRS requests of me, they can disallow that expense. Right? So why do you think IRS is requiring Form 1099 miscellaneouses to be issued? What do you think the reason why they're requiring these to be issued? To track, yes, they want to get money to track income following the cash proof. So if I received this 1099 miscellaneous from my public school, if they issued this, where do you think they're going to go? They're going to run to James Gordon's tax return and make sure that he claimed it, right? The EIN number here is the person issuing it, okay? So if your public schools, their EIN number there, and then this is going to be the recipient's Social Security number, or if they provided an EIN number, it'll be an EIN number. So basically, this is the number here is in regards to the recipient, okay? So we've thoroughly talked about part one. what comes up next? So after we complete, we've figured out our header, we've figured out our income, what are we going to have? What's going to come up next on our Schedule C? What's going to come up next on the Schedule C? Expenses. Thank you, Robin R. We're going to look at expenses. So when we're talking about expenses, what must the expenses be? It's written there right on your screen. They must be ordinary and necessary, okay? So the phrase ordinary and necessary is one that you will see in any discussion of business expenses. Ordinary is one that is common in that particular trade or business, and necessary is defined as helpful or appropriate. So let me ask you about Ted, who owns a landscaping company. John is his employee and a landscaper who has a terrible toothache and cannot work. As the owner of the landscaping company, Ted decides to take John to the dentist to have the tooth fixed and pays for it as well. Is the dental bill a deductible expense for Ted, the business owner? In chat, give me a yes or a no. So I have a mix here. I have a yes or a no. Can someone, is there anybody brave enough that says yes to explain to me why you think it is a deductible business expense? Can you unmute and tell me why?
I wouldn't think it's directly related to the business as much as it relates to the employee who is a part of the business.
Okay, so Murat says he can't work with a hurting tooth. So, but the thing is when we're talking about expenses, we're talking about ordinary and necessary. It's a landscaping business, okay? Having dental bill is not ordinary and necessary. Yeah, you might need employees, but that's not an ordinary and necessary. So absolutely not. It was just nice of the employer. So this is what I wanted to explain to you about our magic ceiling tiles at H&R Block. So Valerie, can you mute your line, please?
Oh, sorry. Jesus.
So here's where we're going to talk about these magic ceiling tiles. So I will have a self-employed person come in, and I'll say, okay, they say, I work for myself. Okay, I want to file self-employed. Okay. So the first thing I ask them is, how much money did you make? And believe it or not, they start looking at our ceiling. And they look, or they maybe look at our floor or whatever, and they'll all of a sudden tell me, oh, I made $15,000. Okay. So I'm going to say, do you have records? Yeah. If IRS asks, can you prove it? Yeah. Okay. So remember, I am not the document police. Okay. So then I say, okay, well, now we need to talk about your expenses. What type of expenses do you have? So do you have advertising? So we go down the list, and they're looking at the ceiling again. So that's why I always say that we have magic tiles, because I had no idea that our ceiling had numbers written on it, okay? So my point here is you need to be extremely careful, and this is why. So what happens if I have a person that comes in, they say they're self-employed, and they come up and they're exact between their number of their income and expenses allows them to get the maximum earned income tax credit because they have children. Or it helps them get additional child tax credit. You see where I'm going here? It's due diligence. Most people won't come in and say, yep, I made $50,000 and I'm going to pay taxes on it, right? Okay. So you need to make sure that you ask your clients, do you have receipts? Do you have contemporaneous records? So if you're wanting to claim mileage, do you have written records? So there are no magic numbers on our ceiling, but there are people that will find numbers up there. So that's kind of, but you need to be careful. I have an exotic dancer who every year, her income puts her in, she comes in, she magically appears with numbers on the ceiling, and she'll sometimes have her expenses written down, and usually she will garner the maximum earned income credit. So I just make sure I document my questions and my answers. And again, I am not the document police. So we're going, schedule part 2 is where we put our expenses in. So business expenses can be many and varied depending on the business. Unfortunately, we do not have time to discuss every type, but there are a couple expenses that deserve a bit more. So I already talked about them. Our contract labor, number 11, that's where if we paid someone $600, if we paid anybody our contract labor, that's where we're going to put them if they're not W-2 employees. And we, as an employer or as a business owner, it said right here, did you make any payments in 2019 that would require you to file a Form 1099, yes or no? If you answer no, you're done. And then it says, if yes, did you or will you file Form 1099? Well, I'm not going to risk that IRS is going to disallow that, okay? I'm going to make sure that I issue them. Super easy. You can just go out on the web, Google. I tell my clients that you just go out and Google 1099 miscellaneous because they have to be e-filed, and you can fill out 1099 miscellaneous online and e-file for anywhere from $1 to $2 a piece. Well worth your time, okay? And then the next thing is you'll notice depreciation, which the next chapter you're going to see me in person is my least favorite chapter to instruct, which is depreciation. But can you tell me what if they purchase something that has a useful life of more than a year? Okay, when do we depreciate an item? So back, if you think about my candle making, and I went and bought a stove to melt my wax on, that is a depreciable asset. Why is it a depreciable asset? Does anybody have any idea? So in order to depreciate something, so what is depreciation? Depreciation is, I've got a business asset. Depreciation is the process of recouping the cost of my stove over time. So I can only depreciate something that has a useful life of a year or more. Okay, so my stove, I paid $1,000 for it. It is has a useful life of 5 years. So over the next 5, actually 6 years, I'm going to take a piece of it until I recoup my cost. So I'm only going to have items on line 13 that have a useful life of more than a year. So I'm back to being a subcontractor, or I'm a contractor and I build homes for a living. My hammer doesn't have a useful life of more than a year, so I'm going to expense it, okay? And then remember when we were talking in my candle making about utilities? So now I'm paying rent for a space to make my candles. My rent goes here, and my utilities that I use to heat that stove, used for the electricity for that stove goes there. And legal and professional could be lawyers, but this is also where we put the deductible portion of tax prep fees. Okay, let's do a check for understanding because I'm getting way behind. Which of the following is not a part of Schedule C? You don't have to put it, you can only put it in, you just put it in chat if you don't have your check mark tool. Okay, so it is your self-employment tax, and we are going to talk about that form shortly. But let's do a little activity. You're going to need your line tool to do this activity, which is up on the left-hand corner. There's an arrow, a T, and then there's a line. You're going to take this line tool and decide whether these items are deductible or non-deductible. Yeah, you can use your highlighter too, that's fine. Hey, Valerie, I see you're working so hard to get caught up on all these, so thank you. If you don't have annotation tools, it's okay. Okay, so let's take, a look here. So we have our, oh, wait a minute. I have to debrief, but the thing is I'm going to erase all this so that we can look at it, okay? Clear all annotations. So social networking, that is deductible because that's just like, it's an ad. Business rent is deductible. Personal use of car, personal use of car. That is non-deductible because that's the personal part of it. Business supplies are deductible. Qualifying home office can be deductible because it's qualifying. We're going to talk about that in a little bit. And personal withdrawal. So there's only two, and Kathleen kind of summed it up. If it said personal, it'd be non-deductible, and if not, it is deductible. So now you've got another one to do. A deductible, maybe non-deductible. Use, again, your line tool, please. Okay, so let's take a look at these. So we are using office supplies, deductible, legal fees as long as they're tied to the business, deductible. The tax prep, the portion that is tax prep, oh, I want to take that one off. Tax prep is a maybe, okay? Not all of your tax prep. So tax prep is a maybe. Legal fees are a maybe because they're going to be contingent on what you're doing, what type of legal fees. So if you go to an attorney and while you're there, you're setting up your LLC, single member, so your self-employed single member limited liability corporation, and you're doing your will, and then he sends you a bill, only the portion that is tributable to the business is deductible. Business suits are not deductible. No if, and, but, or maybe, because a business suit you can wear anywhere, so therefore it is not deductible. Penalties are never deductible, okay? A penalty is like I get a traffic ticket. I can't write that off. A penalty is I did something wrong. Not deductible. And mills are maybe. So while we're talking about a deductible business expenses, can a sole proprietor pay themselves as an employee of their business? So I'm the sole proprietor. Can I issue myself a W-2? Yes or no? Am I an employee? Yes or no in chat? Boy, Cindy said that forceful. No, you may not issue yourself a W-2. All the money that's there is yours. So no, you are not. Can a sole proprietor have a need to pay payroll taxes or issue W-2s? Could an employer need to pay payroll taxes and issue? Yes, if they have employees, it's just they themselves can't be an employee. Let's do a check for understanding. Put a check mark next to what you think is the correct answer. If you don't have the annotation tools, put the correct answer in chat. I love it. Someone's getting creative. They're bored with the check mark. 2, 4, 6, 8, 9, 10, 11, 12, 13. Yep. So I have like 19 of you in here. So you need to all participate. So both A and B, they must be ordinary and necessary. So we're just going to look at page 2 real quick of the Schedule C. The first portion is cost of goods sold. The second portion is vehicle information, which we always enter vehicle information in our asset tab, and then it flows here, okay? And then this is description of itemized list. So let's say I have an exotic dancer who is self-employed and her stuff doesn't, like one of the things is hair and makeup or hair and pedicure, that kind of thing. That doesn't really have an area up above in the boilerplate. So I will write other hair and makeup, hair and whatever, and that's where the list will come out, okay? Let's take another check for oh, nope. So once you have done all of that, we will end up with our tentative profit or loss on line 29, and it's tentative because we have to then see if they have 30, line 30, which is business expense use of home. So we're going to talk about that shortly. Let's look at another check for understanding real quick. Okay. So in chat, tell me, what is your bicycle? Is that business property or personal property? Personal property. What about the school laptop? Is that business property or personal property? Okay. Yellen Dunn doesn't say it's business. It says your school laptop, so that's not business. The only one on here that says your business cell phone. Just so you guys know, we are not allowed, IRS does not allow personal losses, only business losses. So the correct answer would be 200 because the bicycle is personal property and your school laptop is considered personal property. So these losses are not allowed. That's fine. That leaves you with business phone. Give me a green check if you understand that. No personal losses allowed. Okay. So if I have a net profit, so I'm not worried about it. At the end of the day, I showed a profit on my business. What form am I going to need to file? What am I going to have to pay on that net profit? What am I going to have to pay on my net profit? Self-employment, what? Tax. What type of tax am I going to have to pay, you guys? What's the tax I'm paying? Self-employment tax. What does it consist of? There you go, Valerie. Social Security and Medicare. And what form am I going to need to file to report my Social Security and Medicare tax on? Well, that's what we're going to talk about. So if I have a net profit from being self-employed, I will have self-employment tax due. So basically, this is the part to decide whether you do a long or a short. But this is what the form looks like. So on line, you're not going to normally see line 1A and 1B because that's net profit from a farm, okay? So then you put, line 2 is usually where we start. You put your net profit from the Schedule C, goes on line 2. You combine all those lines, that's line 3. So how much, what is the dollar amount you have to make in order to have to claim Social Security and Medicare? So we talk about business income and expenses, having a net profit. How much does the net profit have to be before self-employment tax is required? What does your net profit have to be? Yes, right here. If 400 or more, okay? So basically then we're going to take line 3 and we're going to times it times 0.9235. And what that number is then we're going to times that times 15.3.153, and that will give us our net Social Security and Medicare tax we have to pay. And line 6 is half an adjustment. So what we're going to do now, real quick, and I mean really quick, is I'm going to give you an example. So if I made $10,000 profit, what line am I going to put $10,000 on? What line is my $10,000 going to go on? Hopefully everybody has their calculator. So we're going to put the 10,000 right here on line 2. So what's going to go on line 3? the same. So we're going to put $10,000 on line 3. So what is my math going to be? So whoever's putting the check mark on my screen, can we not put it right there because I'm trying to write on my screen? So how much is line 4 going to be? Get your calculators out. Yep, Destiny, 9,235. What is my amount going to be on line 5? So I've got $10,000. I'm going to be subject to Social Security, Medicare on 9,235. Yes, that's right. $1,413 is going to be my total Social Security and Medicare bill. And what is going to be the amount on line 6? Good job, Destiny. I'm going to get to take $707 as an adjustment to income. Because when you are a W-2 employee, we'll talk about that in a minute. When you're a W-2 employee, you're paying half of your Social Security and Medicare, and your employer's paying half of your Social Security and Medicare. So IRS says it would be unfair for you not to be able to take a half of it as an adjustment, okay? Where does that $707 go on the return? Where do I carry that to? It's right on the form, you guys. If you can read the form, you can tell me where it's going to go. That's what I mean about learning to read your forms, because your forms are going to give you all kinds of answers. It's going to go on Schedule 1, okay? The top cost of Schedule 1 is other income. The bottom half is adjustment. Good job. So we're going to look at Jefferson. He has an employer. He's the employer. And if he had an employee, a W-2 wage employee, he would pay half of Social Security Medicare. She would pay half, for a total of 12.4%. And then same with Medicare, 1.45 and 1.45 would be 2.9, giving us a total of 15.3. Give me, using your annotation tools, give me a check mark, or using your highlighter, how much of these taxes is he as a business owner going to be able to write off that because he has an employee? How much is going to be a deduction as an expense? Because he issued a W-2 and he's the employer. So that's the employee. So he is going to be able to write off 7.65% or half of it, right? Because those are an expense of that he had to pay out for his employee. He only gets the part that he pays. Give me a green check if you understand that. Next to your name. Okay, let's do a check for understanding, and then you're going to get your second break. Read the question, and once you think you know the answer, put a check next to the correct. Ooh, good. right. W-2, self-employed. Remember, they get the whole net profit or the whole net loss, so there's no issuing on that. Okay, second break time. Let me get my break thing up here. Let me erase this little thing here. And it is, let me erase that. It's 6 after the hour. So we're looking at 10-minute break is 16, right? Okay, 16 or 17. Give me, if you're going to walk away from some computer, please put up your coffee cup and I'll see you back in 10 minutes. Sorry, I didn't realize I was muted. Take down your coffee cup. We got a lot to cover. Kathleen is wanting to know if you guys want to do a study group. She says, do you want to again ask about study group and use me as a contact person? So if you guys are wanting to be, if you're wanting a study group, I guess the thing you would need to do is private message Kathleen your email address, I guess. I'm not sure how to do that. Are you going to do, Kathleen, are you going to do a Facebook group or what are you going to do? I'm not sure. I can't be a party of it. So we'll talk about that. If you are interested in a study group, hang out right after class because we've got tons of stuff to do. I mean, I hate breaking it up into 2 breaks. It makes it very difficult. So we're going to talk about a home office. Although many taxpayers work from home, only those who qualify will be able to deduct their home office expenses as a business expense. Employees, as opposed to self-employed, cannot deduct home office expenses. What do we mean by regular and exclusive use? So what does regular and exclusive use mean? No kids, no cats. Does someone want to unmute real quick and tell me what regular and exclusive means? It's not a spare room or a workout room too. You're correct, Robin. You're using it for business, but it doesn't mean you have to use the entire room. I have a client that owns a food cart. He converted his walk-in closet in his guest room to his office in home. It just means you better not be caught with any personal items, no personal finances, nothing in that. And regularly does not mean you have to use it every day. It just means that that's what you're using it for. You're using it for your business. There's 2 exceptions. What are the exceptions? Yes, Kathleen, just for business. There's 2 exceptions. What are the exceptions? So the 2 exceptions are storage of inventory. So if I'm using my garage to store inventory, it doesn't have to be exclusive and regular use. And what's the other exception? There's one type of business that has a running exception. I'm assuming, Vanjie, you were saying daycare, okay? So the 2 exceptions to regular and exclusive use, hopefully you guys read this chapter because this is a big item. The 2 exceptions are if you're using for storage of inventory and daycare facility, because when you have a daycare facility, it is hard to keep the kids out of parts of your house. So you don't have to have the regularly and exclusive. Your kids come, they use your living room, they use your bathroom, they're in your kitchen. It doesn't have to be exclusive use. There are 2 methods to calculate office and home. What are the 2 methods? There's 2 methods. We're not worried about square foot right now. What are the methods we're going, well, yeah, kind of. What is that called when we're just looking at the square footage? Okay, so there's 2 methods of calculating. Oh, you guys. So there is the simplified method, okay, and that means What's the simplified method? When I'm going to use the simplified method, I'm going to get so much per square foot, how many square feet maximum. So in the simplified method, I'm allowed to use $5 per square foot up to 300 square feet. So the maximum I can get is, yes, Robin and Claude, the maximum deduction I can get is $1,500, assuming I'm using 300 square feet, okay? And what is the other method? So if I'm not going to use the simplified method, what's the other? The other is actual, not accrual, it's the actual, yes, there you go, Gwen. It's the actual expenses. That's where, what form do I claim my office and home expense on? What form am I going to use? There you go, Robin. So we're going to look at the form 8829, and I'm going to show you the difference between simplified and actual. So after it has been determined that the taxpayer qualifies to deduct home office expenses, you would typically look at both methods to determine which method would result in the larger deduction or best overall result. In the actual method, there are two types of expenses. Direct expenses, indirect. So this is pertaining to the office and home. Could you quickly text a couple examples of direct and indirect expenses? So first of all, what is a direct expense? What is a definition or an example of a direct expense? Valerie, fully chargeable, what is it though? That doesn't help me out. What is a direct expense? Or an indirect expense? Means it's, a direct expense is going to be, okay. So we are running out of time. So here's examples, okay? Actual expenses are divided into two categories. A direct expense would be, so I'm painting just my office. That's a direct expense. I installed new flooring just in my office. That's a direct expense. I have utilities, but I have a meter for that office only. Let's say I built a building, a little shed out back that I converted into an office, and I metered it separately. That would be direct. Let's say my kid threw a ball and broke the window in the office and I had to repair it. That's direct. Indirect is what applies to your entire home. So now I have a mortgage on that home that office is in, or I pay rent. So it's an indirect expense, and now I'm only going to get to take a percentage of it. Real estate taxes, utilities. Let's do a check for understanding. So Jerry painted the entire outside of his home, and he has and his qualified home office. The cost is, so he did the entire outside of his home and his qualified home office. So he painted his entire house, but he also painted his office. So you can change your mind. So he painted his entire house and his home office. So if you pick A and B, the direct expense, so when you're looking at this, This is the direct expense because he did his office. And the indirect is he painted the whole entire outside of his house. So he has a portion. So we've talked about the theory behind the 8829. Now let's look at how we break down the 8829. So we have talked about prorating the indirect expenses. So how do we accomplish that, and what figures do we use? How do we accomplish? So you have indirect expenses and you need to take a percentage of that. How do we accomplish that? So on line 1, we're going to put regularly, exclusively used for business, okay? So I have a 900 square foot home and I use 200 of it for business. So I'm going to put 200 there. And then on line 2, I'm going to put 900 because that's my total square footage. Can someone do my math? We're going to divide line 1 by line 2. What percentage do you come up with? Put it in chat. Go further out. We go 2 places past the percentage. You're almost there, Murat. There you go. So it's 22.22%. So of this 900 square feet, 22.22% is exclusive and regular business use. So we're going to skip daycare because it is very complicated and it's beyond the scope of this course at this point. So we've got our percentage of 22.22% of what? Okay, that's when we start looking. So now, the very first thing I have to do is I got my percentage, and the next place I go is I skip part 2 and I go to part 3. If I own my home, part 3 is only going to apply if I own my home. And so now I'm going to depreciate a portion of that home. Do you know how many years, I'll just give you the answer because you haven't been taught this yet. When you have an office in home, and remember I talked to you about when you depreciate something, it has a useful life. And the useful life of a home in office is 39 years, okay? So if I own a home, I'm going to depreciate a portion of it. I'm going to enter the smaller of the home's adjusted basis or fair market value on the day I put it in service. I have to take the land out of it, and then that's going to give me my basis in the property, my skin in the game, the amount I'm going to depreciate. And then remember, our percentage is 22.2%. So I am going to get to depreciate over time 22.20%. So let's use this as an example. A house costs $250,000. My property is worth $100,000 of that because property is worth a lot. So let's get one more zero. So my basis in the property is $150,000. And my basis is line 39 times line 7, which is that 22%, excuse me. So how much am I going to get to depreciate? Of the $150,000, how much am I going to include for depreciation on my 8829? Do the math, someone, for me. No, it can't. It's going to be 150,000 times 0.2222 equals. That sounds like too much money. So let's leave this because you're not going to get to take that much. So it looks here. It says the smaller. Oh, I know what we did wrong. Excuse me. I know what we did wrong. That's right. Okay, so we're going to have to let this go right this second. I'm going to have to think about this. So let me think about it. It says building basis, business. Oh, the basis of the building is, okay, so the amount we're going to use for business, excuse me, you guys. So what we're going to get to start depreciating is $33,300, okay? That's the business portion, and then we would have to go find out 39-year property. We're only going to get a piece of that, okay? Do you understand that? So we've got $150,000. The part that is business use is $33,300, and we're going to have to recoup it over 39 years. So we will get a piece of that, and we're in next chapter, chapter 16, we're going to talk about depreciation. Give me a green check if you're okay with that. I don't want you, it's just very complicated right now. But if you rent, we don't have to worry about that, okay? This will all make more sense when we talk about the next chapter. So once we've done part 1 and part 3, then now we can go back here. On line 8, we're going to put our tentative profit. Remember our tentative profit from our Schedule C? Before we get to decide how much? So we got our tentative profit, and now you will see that there are direct expenses and indirect. So this first part is your deductible mortgage. So this is where you put your mortgage interest and your real estate taxes. That's the first. Those are indirect because they're not direct. You are not paying that. Direct expenses would be insurance is indirect, rent is indirect, repairs and maintenance, and utilities. But we could have, if we painted the office, that would be a repair. It could be direct. You could have insurance, business insurance, but it wouldn't be on the home. That would be indirect. You could have other expenses. Let's say you could have a utility. Let's say you only have your internet line plumbed to your office. Then that could be a direct expense. So do you guys, do you understand the difference between direct and indirect? Business cell phone goes someplace else, Gwen. That doesn't go in home and office. That's something you can use in other places. So there's a hierarchy order here. So if you are itemizing any amount, if you are itemizing on your tax return, so you're using Schedule A, then you would enter your mortgage, deductible mortgage interest, and real estate indirect expenses here on line 10 and 11. If you are using the standard deduction, you enter them on line 16 and 17. So they're going to only be entered in one place. They're entered here if you're itemizing, because the portion that is not attributable to the business, where could we deduct it? Where could we deduct it? If we're only going to get to take 22.22%, there you go, Valerie. We could put it on our Schedule A. So when you're putting it in Blockworks, you need to make sure that you're putting it. If we know they're itemizing them, we're going to put it on 10 and 11. If we know they're using the standard deduction, we're going to put it on 16 and 17. So there is a hierarchy. So there is a preset order of deductibility. So remember, we have our tentative profit here on line 8. So the first thing that we deduct from our tentative profit is this part. So there's a preset order. First are the expenses that would normally be deductible on Schedule A. So the first part we're going to deduct off of our tentative profit is our deductible, percentage of our deductible mortgage, and then our real estate cost, okay? If we have money still left over, a tentative profit still left over, we are going to take our this second section of expenses, either direct or indirect. So we have a tentative profit. We're first going to take off our deductible mortgage interest and our real estate tax percentage. And then if we still have tentative profit left over, we will then go into the pink area. And then if there is still money left over, then we take our depreciation last, okay? Why this is important is if you create a loss, okay, so you got a tentative profit and your home office creates a loss, you can't take a loss. A home office cannot create a loss, okay? But what is allowed, so let's say we took our tentative profit, we took off our section, the first section, we still have money left over. We took off the second section, and because we took off the second section, we created a loss. Okay? Well, we're in a negative space. You cannot have a home and office cannot create a loss. But what you can do is if you used up all of 2 and you still, and at that point you broke even, the third section is where your depreciation is. You are allowed to carry that forward. So if your depreciation creates a loss, you are allowed to carry that amount forward that you're not allowed to deduct. Give me a green check if you understand the order and that a home office cannot create a loss, but you are allowed to carry forward your depreciation. Any questions about the Form 8829? I know we zipped through it. I would recommend that if you have questions, you email me questions about it or ask me right now, or that you go look at that section again, okay? Right, it's complicated, and the thing is that the reason why, if you have someone who rents, the simplified method is a good method, but you want to figure out whether the simplified or actual method is going to give them more bang for their buck. Oh yeah, I understood, Valerie. The thing is with when you do the actual method, you have depreciation, right? So when you go to sell your home, you have to recapture that depreciation. So you have to pull it back and pay taxes on it. So we have to make sure, so if you rent, it's great to use actual because you rent, you don't own your home, you didn't use depreciation. So if you have a home in your office and you're depreciated, when you sell your house, you've got to go back and recapture that depreciation. and it's allowed or allowable. So if your client says, well, I want to do actual, but I don't want to claim depreciation, I say, well, why wouldn't you want to claim depreciation and get the tax benefit? Because when you sell your home, we have to recapture it whether you used it or not. So if I have a net profit on my business when all things are said and done, what am I going to owe? Besides Social Security and Medicare tax, what am I going to owe? I have a net profit. So I have a net profit on my business. There you go, Robin. I'm going to owe income tax. So that brings us to our next subject, which is estimated payments. So our taxing system, whether it be at federal or state, is we are a pay as you go, not as you owe. So if you do not get all your if you're going to make money, you need to pay estimated taxes. So normally they're called quarterlies. So in a normal tax year, and I say normally because 2020 is not normal, your estimated payments would be due April 15th, June 15th, September 15th, and then January 15th, because we're teaching 2019 tax law, your last payment would be due January 15th of 2020. So if we're pay as you go and not as you owe, and you have a profit, what the IRS does is they take that profit and they divide it over 4 quarters. And they say, okay, you would have made this much of that in January to March. So we're going to charge you penalties and interest from January 1 to the end of the year. And then you would have made this much in April in the next quarter. So we're going to charge you penalties from April to the end of the quarter, end of the year on that amount. In June, same thing. You would have made this much to the end of the year. So it's not just a flat amount, it's based on each quarter. If you had a real estate broker who made all of their money in the last quarter of the year, it would be, and they didn't make estimated payments, it would be unfair of the IRS to charge them penalties from January 1. So you'd have to do a little extra work to show IRS where that money came from. Now, with that being said, for COVID changed for 2020. So for 2020, because of COVID, the estimated payments were changed. Your first payment was due July 15th. Your second payment was due July 15th. Your third payment was due September 15th. And your final would be January 15th of 2021. So what I usually do is I make sure that my clients understand that about quarterlies, and I can help set them up on quarterlies. But lots of times people have no idea how much money they're going to earn. So what I'll do is I'll print them blank vouchers, and I'll say what I want you to do is track what you earned in January, February, and March. I want you, based on the percent of federal tax they've been paying, I might want them to send 15% to federal. And if they live in a state like Oregon, I'm wanting, no, it's September. 8/15 is August. Is that what you're asking, Gwen?
Well, I'm talking about for the COVID change. Why is there 2 payments on July 15th?
Because of the COVID and how we didn't have a filing deadline until July 15th, they changed that. And they ponied up the first and second. Normally, you'd have them due April and June. Okay? So that's why they did that. They took April and June and made them due, on 15th. So what was I talking about? So if I had this client, I'd recommend that they have this blank voucher. They figure send 15% to federal, and like the state of Oregon is pretty much a 9% flat, I'm going to have them send 9% to the state. Or they can wait a year. That has to do, Claude, that is going to be on passive income, which is in Chapter 18. So now, quickly answer the question, put a check mark next to the correct answer, because we've only got 14 minutes and I've got a couple of important subjects left. Sure, no problem. Estimated taxes are computed and paid. They are paid quarterly. Good job. Thank you, guys. So then we have this QBI, which is a qualified business income deduction. So the Tax Cuts and Jobs Act, the TCJA, created the QBI deduction for taxpayers with income from pass-through entities, including sole proprietors. This was a new deduction for 2018. The reason for this deduction was to level the playing field between the sole proprietor and the corporation. Corporations get all kinds of tax breaks. How much is the qualified business income deduction? How much, what's the percentage of the qualified input? Does anybody know that QBI can be up to a certain percentage of qualified business income? There you go, Valerie. It is up to 20% of the qualified business income. So what does it reduce? Where does it go on the return? Does anybody have any idea where this qualified business income deduction shows up on the 1040? If line 10 is right after the standard deduction, you're right. So it goes right underneath the standard or itemized deduction. Yes, it reduces your AGI. Correct, Valerie, before we figure out the tax. That's correct. So there are limitations on the deduction. And the limitations, so when you look at it, so they start phasing out the lower thresholds. If you're married filing joint, is $321,400. Married filing separately is $167.25, and all other filing status is $167.00. For the majority of taxpayers, the QBI will not be limited. Their income, they're making lots of money. So let's look real quick at how this comes out. So this is what I need you to concentrate on when you are doing your case study, is go to your chapter in Inkling and make sure you understand how the 8995 works. They're also giving you a worksheet, but it can get confusing. So make sure you're listening to what I say. You are going to get, so here we had your qualified business income. Okay, that was your profit, minus that half of Social Security and Medicare. Excuse me, I'm lying here, okay? I hate when I lie here. Okay, so what you have to do is you take, I hate this new form, I hate it. So their gross profit, let me look at this. Let me make this bigger. Don't you just love when your instructor has no idea what's going on? So we're going to take our qualified business income. This was our qualified business income and put it here. and then we're going to multiply it by 20%. So you're looking at 4501. But your qualified business income is reduced by your half of Social Security or Medicare. So originally, your income was $29,703, and then we had half of Social Security and Medicare and your self-employment medical insurance. So between the two of them, that was $71.99. You know, it would help if they helped me here. So $71.99. So if you take $71.99 from the $29.73, you end up, this is where you got this number on 22,504. Understand? Give me a green check if you're with me. So you're going to take your total Schedule E profit less your Social Security, half of Social Security and Medicare, and if you have any medical adjustment, and you're going to end up here on your $89.95 of 22,504. Okay? You're going to get up to 20%. You can get 20%, which is 4501. But remember, it's either 20% of your qualified business income after the adjustment, or 20% of your taxable income, whichever is less. So how do I figure up my taxable income? So I took my 2204 minus the 12,200. What do I end up with? I end up with the 10,304. And 20% of that is 2,061. And I get the lesser of the 4501 and the 2,061. And there's my QBI. So what I need for you to take away, and this is from experience from my Oregon class, is you either get the 20% of your qualified business income deduction, which is your net profit minus your half of Social Security and Medicare that you took as adjustment, and any medical, self-employment medical that you took as an adjustment, okay? That leftover amount, you get 20% of it. In this case, it's 22,504. And then you have to go figure your taxable income. The way you figure your taxable income is you take your adjusted gross income minus your standard deduction. Because you haven't put the QBI on there yet, minus, which in this case gives you $10,304. Gives me 20% of that is 2,061, and that is what you're going to get to take. So I'm going to give me a green check next to your name if that makes sense, a red X if I need to repeat that. So if you can just keep in mind when you're doing your case study, you're going to get the lesser of those two amounts, and that you understand how to calculate those two amounts. So if you didn't give me a green check, do I need to repeat? Okay, nobody put a red X there. So we are ready to discuss. So the takeaway is this. We had our, matter of fact, if I were you, I'd pick my phone up right now and I would take a picture of this. The way we came up with our 22,504 is we took our net in profit from business minus half of our Social Security and Medicare minus our self-employed medical insurance deduction, which then gives us the 22,504. And 20% is 54451. And then I told you how to calculate your taxable income. So remember, you get the lower 20% of your business income or 20% of your taxable income. Now, get ready. I'm going to move my thing and start writing numbers. Here are the bottom lines for your case studies. So once you have this written down, please give me a green check next to your name. So my recommendation for you is once you pass our class and you come to work for us, one of the items I would recommend you do is you go into Block Academy and search our learning bank and find anything you can on QBI. Most of them are web-based training. You can do it on your own and take the web-based training on qualified business income deduction. Okay, let's see. Hector, Laura, you have it written down. Marat, do you have this written down? Okay, I'm going to move to the next one. And then if you need to see it again, let me know. Again, once you have this stuff written down, give me a green check next to your name. Okay, so we're going to discuss your homework. You need to complete your Chapter 14 case studies, do Chapter 15, which is a self-study, exercises, case studies. Don't forget your Block Academy questions. Read Chapter 16 and complete Chapter 16 exercises. Now, I'm going to move to the next screen, which is going to give you your bottom line for your chapter. Ignore these because this was for my Oregon group. I'll move them out of the way. Here's the bottom line for your Chapter 15 case study. Once you have this written down, please give me a green check next to your name. So today we discussed several aspects of tax theory in regards to the sole proprietor. We learned what is considered self-employment income and what expenses we may deduct. We looked at the Schedule SE needed to calculate how much Social Security and Medicare the sole proprietor will need to pay. We also learned about H&R Block's magic ceiling tiles. We learned that we need to make sure that we practice due diligence when we are filling out our Schedule C and ask questions and document all the answers. We also looked at estimated payments, who would need to make estimated payments, why they would need to make them, and when they need to be made. And we also looked at QBI, qualified income, business deduction. We will also talk QBI in a couple of future chapters. Your next session is capital assets. Chapter 15 is capital assets. That's kind of a fun chapter. And then the next time you're going to see me in person, which is a week from today, and in chat, what time does our class start a week from today? Is it the morning or after? There you go, Murat. Yay, Murat, good job. It's an afternoon class, so it won't start till 1 p.m. Central. Yes, I think it's helpful. If you go to try to log in and it won't let you log in, that means you're not at the right time zone, okay? Or if it tells you you have to come back in 3 hours, then you know it's an afternoon class. Good job. Any questions? I want to thank you guys. Sorry about having to rush through that last piece. And my best suggestion for you is not to get buried in the QBI, but to remember what I told you about the QBI, even if you can't figure out the form, because thankfully Blockworks can figure out the form. Okay. So if you are good and you have no questions, thank you for coming to class and participating. And I'm really impressed with this class because my group, my basic core class of you guys, which is about 18, 19 of you, my core group, you've shown up every single week or the majority of the time. So give me a goodbye in chat. You're welcome. Thank you for your time. Happy Halloween. Don't eat too much candy. Be safe. Remember, there's always Halloween next year. Do something fun. Create a memory with your family. That doesn't mean you have to go trick-or-treating, but if that's your choice, do it. If you have questions, yes, Destiny, please stay behind. Yes, Yossi, you can ask me. So, Yossi, go ahead and unmute, and then Destiny, I will try to answer your question. So, what's up, Yossi? Thank you. Okay, Yossi, you're unmuted, but I can't hear you yet. Yeah, just go ahead and hang out, Kathleen. I'll answer questions. Yossi, do you have a question, Yossi? You can unmute and ask me. Okay. Line 11 on the 8995. Well, Yossi, that is you take your AGI. Hold on, I'm going to back up the train here. So you take your AGI right here, 8B minus 9, and that's where that number on line 11 is coming from. Okay? So 8B minus your standard deduction, your adjusted gross income minus your standard deduction. So in this case, it's 22,504 minus 12,200 gives you $10,304. Okay? Okay, perfect. Hey, Kathleen, up next. Oh, you're welcome. No problem. You want to unmute, Kathleen? And Destiny, I'm going to get you next.
Oh, I'm so sorry. I got booted out like right at the last minute when you were getting